move on to IndusInd Bank, that is all set to report its Q4 earnings as of today, and the bank is expected to report an uptick in its NII, net profit and provisions. Now, you can expect from the results, and what are the factors that you really should be keeping an eye out on? My colleague Hersh is here with all those details and the poll. Over to you, Hersh.
Well, yes, IndusInd Bank's numbers also expected. 4,750 crore is where that net interest income is expected to come at. When NIMs are concerned, largely flat is the expectation. 4.3% is where NIMs will hold. So the NII expansion largely on the back of the loan growth that's coming through, which is 21% on a year-on-year basis for FY23. So a solid set in terms of the loans and the deposits. But at the moment, let's focus on the operational expectations that's coming through. Operating profit expected at 3,850 crore, which is a healthy 14% uptick on a year-on-year basis. We are looking at provisions largely flat on a sequential basis at 1,100 crore. Of course, you will have an eye on both slippages as well as credit costs, and what is happening in the MFI book will be a focus for investors and analysts. Where PAT is concerned, it's expected to go up by 43% on a year-on-year basis. 2,000 crore odd is where that PAT number is expected to come at. Where GNPAs and NNPAs are concerned, GNPA is expected to come down or shift downwards by around 20 basis points on a sequential basis. NNPA is largely flat at 0.6%. I think they'll be happy with that particular number. Where CASA is concerned, calculated CASA has gone up by around 7% on a year-on-year basis, and the CASA ratio has come off quite sharply. 190 basis point knock on a sequential basis on that CASA number. So where do deposits go from here will be a key focus area for the company, as well as what is the impact of the deposit growth going forward as well. 15% deposit growth is what the company has clocked in this particular quarter, and where does it go going forward will be very, very important, and what does it do to margins as well is going to be a key focus area. Of course, other than that, it's going to be, I did speak about slippages and credit costs. Also, the other piece is the larger asset quality is also going to be in focus, and whether that deposit growth can be sustainable. 15% year on year, whether it's sustainable or not.